All right, traders. Hey, welcome on back for another fantastic edition of our Traders Talk Workshop. Monday, October 6th. Great to have all of our students and members here. Got Leda, Bell, Tim, you got Genevieve just before, Brian, Chuck. Got a lot of our students still with us here. This has been a crazy Monday morning. Whether you're here with us or on social media otherwise, Facebook Live, LinkedIn, Twitter, YouTube, etc. Crazy day in the market, crazy morning. I've been battling with my management company in my apartment here. So long day. Now, with that said, though, if you're on social media, Facebook Live, LinkedIn, Twitter, YouTube, etc., let me get that popping back up lower left. I was too distracted talking about my apartment issues here. But down below, lower left, at Cyber Trading You. If you're new to our stream platform alike, just hit the follow, hit the subscribe button. If you are new, then definitely make sure to check out the Money Show. We're going to be doing a big event going into next week. Fausto and myself, if you're around the Orlando area, we're going to be at the Money Show event. So, if you're in the area, definitely stay tuned for that. Then even the week after that, we have our in-person Traders Summit event. If you're a gold, platinum, diamond CTU student, you should know this at least once a year. We have our in-person event that we host. It's in Long Island, New York, our CTU in-person Traders Summit. So looking forward to seeing actually a lot of us that are inside this chat board right now in just about 2 weeks' time. Now, Hassan here asking, hello, Josh, which ticker is helping us make money? The better question, Hassan, is what ticker already helped you make money? Because let me ask our students here to begin. What times are the more active trading times for us to be more aggressive within? Is it right now, or are there better times than noon Eastern? What are our better times to be more assertive as day traders, as active traders here, folks? What do we got? 9:30 to 10:30, right? So from the market open, the first hour, right? So what stocks already made you money, Hassan? What stocks already made Bill, Uday, Margaret, Sam? A lot of us already money, and you see the answer on the screen here to begin. It's the OneMed, right? OnMed, OneMed, whatever you want to call it. ONMD, this thing popped up in pre-market. Then it popped up shortly after the market did open, right within the first hour. It ended up reversing a little after 10:30. A little after 10:30 in the morning did it actually reverse. So easy to leave money on the table for a stock like this. But Hassan, this is where for trial members like yourself, like I see Aman here joining us, Daniel, I see a few more just testing our room out from this week. Suresh, Vigad, you got Tung here. So a few of us at least joining us from last week's event. Now, this is where I could tell you, hey, you can get Billy Bob, Joe Schmo on the microphone here, and they could tell you, well, hey, you could have jumped in here and then you could have sold here. That's not the purpose of this workshop. The purpose of this workshop is applying what we teach in our main curriculum, not just on this one stock, but across a list of stocks that already moved from earlier. I mean, even right now, as I'm yapping, my swing trade, the SMCI, is trying to bounce right now. The gap fill is still very much in play. In fact, it's only getting closer to coming to fruition there. But, that's just where I'll say, even from earlier, a stock like this, how could we apply the same patterns, the same strategy on this that we will apply on OneMed here, right? So I know a lot of our traders got in on this stock around $1.50, if not $1.50, then $1.75, $1.80-ish here. But let's go over this trade to begin, and we'll see where the iceberg orders were. If you were here in pre-market, if you were grabbing your coffee, listening to Fausto in the morning meeting, well, hey, you should have taken the time yourself to go through Bookmap, to go through level 4, and see where the true orders were. So let me ask Hassan, let me ask all of our trial members this, and then as well, students, Scott, Bill, Albert, Leda, all of us here otherwise. Where do we see the dark, bold, red line stretching across this whole damn page? What do we got here, folks? What is the one that is easiest to see? What is the one that is the darkest shade of red? The reason I phrase it that way is because I'm not trying to toss a curveball here at you. This is just where we focus on the largest, the most obvious, the one that looks the easiest to see, and it is that $1.80 level, right? Now, this is out here all from the morning. It's the boldest red line across the page here, right? Now, how many shares really is that? That's about 76,000 shares to sell. So yeah, this is resistance for right now at $1.80, right? This is where I want to bring up normally for students here, Margaret, Barbara, Phil, Bill, you got Alex, Uday, a lot of us here now. Normally, 50-cent levels and whole numbers are likely to be your key support resistance. Normally they are, they're likely to be. So hey, all the way down at $1, there was likely some iceberg order there when the market opened up. At $2, there's probably going to be a big resistance at $2 as a whole number level. Well, I'd say the same at 150. I would. Is there any red line sticking out at 150? From here, from here, from here, from here, from here? No. The answer to that question is no. There is no red line. It's not easy to see because there is nothing to see. That is where, if you're asking, well, why was 150 not a big level? Because there wasn't really any volume there that's worth our time, that's worth respecting. Certainly not as much volume as what's out there at 180. So this is where I'll point out, you know what? I ended up jumping into this trade myself off the 150 level. But there's a reason why, and then there's actually something that helped me out in this trade that made it easier, but it's not as if I was watching that exact thing when it happened. So let me just tell you, fool me once, shame on you. Fool me twice, also shame on you. Fool me three times, probably again. Maybe the fourth time, finally, shame on me. Where I come to with that is, well, if I see this level keep getting poked, going up, well, at least there's at least some hint of buying pressure coming in. If this stock is not making a lower low and it keeps poking resistance, maybe the first time it pokes that resistance, you should expect it to hold. But the more times it does it in a smaller window, as long as the stock is retaining higher lows, there's a chance. Now, that's what led me to jump in when I did. I got in shortly after the first 5 minutes here. I had to endure these shakes. So this wasn't perfect. It didn't make that big move shortly after. It made a big move just a little while after. You know what I mean? So it wasn't that expected reaction immediately. It required a little elbow grease on it, but it at least retained the higher lows. Now, here, what made this a better trade from the 150 is that, well, after the market did open, and of course, we do wait the first 5 minutes here. You got a 130,000 share order here that does pop up, and it gets hit, right? It gets filled, it gets broken through. You see big green spike right here on the right side. So let me ask us just again for Phil and Bill and a lot of our longtime students, at least Margaret, Barbara, who else we got here? Got Michael, as always. We got Tim joining us. He's here pretty much every day with us now. Wiz, good evening to you over there in Prague. What color, or I'm sorry, what do we nickname the green on time and sales? If we see green on time and sales, green big volume spike, I mean, what are we nicknaming that? Yeah, a lot of us saying buying pressure, right? So that's where the more it kept poke, as long as it's not breaking lower, there's a shot. And thankfully, it made a much better reaction afterwards. So I know Jeff was in this trade with myself off the 150. If you got in from 150, again, it took a little bit, but you got what you were asking for. Now, I ended up getting out on this trade myself right at like 182, 183, and it was after it pulled back here. So I was hoping to see a higher high over time, but I thought that as we were getting closer to reversal time, I was like, you know what? It's a lower high here. It's kind of holding below the 180 here and there a little bit. And I pulled the plug on it. I got out at 182, I think it was, but I didn't get back in. That's the part that I wish I could say I got back in on. But this ended up popping back up shortly after. It held over the 180 much better afterwards here. So for as much as that was a working resistance, the more it kept getting poke, the hope, right? And I wish I jumped back in on it myself there, but the hope would be if this wants to make another move, then it needs to play nice. It can't just chop around a big level. If it's chopping around it, it's not big. That's where I'll say at least you want a better reaction. So when it keeps pressing above this 180, if it wants to move up higher, it needs to stay over it. So thankfully, it played much nicer even during reversal time. So listen, it's reversal time on a Monday. I have no problem getting out of my trade where I did, and I ended up moving on. I didn't jump back into the stock again after. I didn't even jump back in from two. So, let's actually go over this move afterwards here. See if there was an entry off of $2. There was an entry off of 180, but seemingly there was a lot of choppiness around two. And I think one of my traders had asked me that just earlier today. They may have sent it in the chat. I'm kind of thinking of it right now. So, for all of our students here, keep in mind if you have questions you want me to go through, a little bit easier for me to answer, just for me to remember. If I just go through my inbox, so shoot me over any and all questions and trades just to josh@ctutrading.com. But let's go over this stock and see, well, why was it choppy at two? Because $2 seemingly is a pretty big level. It was actually larger of an iceberg at two than there was eventually at 180, right? So, hey, the first time it hit two, it was a false breakout. That's expected. That's normal. But that's where I'm bringing to your attention. Well, this was messy afterwards. Why was this so messy? Well, it didn't need to be so messy, but the reason it was because, well, yeah, two is definitely a strong level in the moment. When it was coming up to it again, it was, retesting resistance, a 103,000 share sell order. I would feel pretty bullish about this right here, and when it keeps retesting it over the next coming minute or so. But what happened was we ended up seeing a new order pop up on the bid, and that helps complement it. That helps support the stock. So at $1.93, we ended up seeing a new buy order out there for about 102,000, pretty much the same size that we had here. So someone's definitely trying to support the trade, and that's good for the overall end result of the move. But if you're asking, well, why was this so choppy around that whole number level $2? Well, it's because we had another level to complement it. And even this, yeah, this ended up getting hit. It looks like it filled the order on the bid, but it made my famed under and over move. This didn't just crap the bed and roll over and that's it. After it filled this order, sometimes it could just do that. But if it comes back up and above this shortly afterwards, well, it needs to still make higher lows. But as long as it comes back up and above this order here, well, that provides room not only for support to build, but also to have an entry. So even if you weren't in from $2 and if you weren't dealing with the chop, 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 well, hey, by the time it ends up coming into this order, under, over, there's your entry right there if you're looking to try and look for another move. But again, it needs to retain higher lows. It can't break lower. So I know that's easy to say that happened, right? I'm Captain Hindsight here, right? So it's easy to say that happened. This easily could have, exhausted out, came back down. Hey, this iceberg that popped up over time, one here, what was this? $2.15, $2 and yes, yeah, 15 there. Or 16. 203,000. That's double the size of these. So it's possible that this could have just stalled out and then rolled over from that point, right? So this is where I tell Nabil, I tell Phil this, Margaret, Doug joining us here. You got Shaffin now, one of our members, taking phase one now. He's been with us for a little bit. Phase two, I believe, actually. Pardon me. But that's just where I'll say that the more that you're going through class and the more you're here in this weekly workshop I conduct, well, I say the same catchphrases over and over for a reason. If this is such a big level here, and if this is such a big area of resistance, and if we're expecting a big reaction off of it, well, it has to be pretty soon. So yeah, there could have been a chance for this to exhaust out. We held higher lows. This eventually broke the next resistance and then flew. So this actually played really nice throughout the day by making the higher lows. But if you're not watching Bookmap and if you're only focused on, just 50-cent levels and whole numbers, well, yeah, of course things are going to be a little difficult there because you're not seeing the rest of the order book. You're not seeing everything else out there. So why was this so choppy at two? Well, it's because we at least had a complementary order here to back it up. So in fact, this was actually relatively clean from this order on the bid. It broke under and over it. And then shortly after that very moment, it seems like it made a big move shortly after, right? But again, if you don't have Bookmap there, and if you don't even have level 3, then you're definitely blind. But hey, if you don't have Bookmap, it might be a little bit harder for you to understand that you might see some consolidation at least off those highs, but it's still a very healthy chart. Higher lows, higher highs. All right. So, that was the on med trade, at least, well, from two. It ended up popping all the way up as high as 280 before coming back down. So, maybe we could look at not only book map, but we could look at the daily chart here. The more this goes up and up and up and up, you kind of have to ask, well, when was the last time this cheap stock, it was like a penny stock, quote unquote, just Friday? When was the last time this was trading around $2, let alone 230, let alone 279, 280 here, right? So, is there any historical level that you could utilize? Well, we have to go back a little bit here to dictate that. Got some wicks here. You got a few there that stick out around a similar price. So, what is that? Kind of between $2 on the gun and 211. So, a little historical resistance, but that's just across a few wicks. That's really it. Even this, I mean, up towards $3.20, $3.35. Those are only two wicks there. I can't really utilize that as some massive resistance. But it seems like this is all I got. So really, I got to work with what I got here, I guess. Man, this really stinks. You don't really have a great long-term graph here. If anything, I mean, this is easy to say now, but for this to break above the historical, resistance that we had, those couple or few wicks on the daily chart, well, it sure looks like it popped from it after. So let me ask all of us here. The answer's on the chart, but I want all of us to answer it. When a stock breaks over a resistance and it convincingly runs from it after, I would like to think that that resistance could initially flip into what, folks? At least the first time, right? At least the first time. Support. So that's easy to say in hindsight, but hey, you know what? For as long as we just kind of took time to go through the historical levels, there's kind of like not much to work with here. Some fuzziness around this area back from late May into June. I mean, this looks kind of consistent, so that's where I was focused more around. It just goes to show that that historical resistance, I mean, as a day trade here the first time, held as support. Is this going to keep making higher lows, and is this going to keep making higher highs later on today? Your guess is as good as mine. Listen, this is up a lot already. It's up 120% already. It's not like this stock is only up 30% today. So, hey, it's very possible this can make lower highs, and then that's it. I just would like to think, though, for that to be such a big resistance and for there to be such a convincing, meaningful, pop from resistance, well, hey, the first time, right? The first time, the first test, that should be your best test. That's your area to see support. But again, if it keeps poking it throughout this afternoon, oh, it's going to slice right through that thing like a hot knife through butter. That's just how you have to expect it. Now, with that, that's where this APLD trade is losing its steam. It's coming back down. I made money on this trade earlier today. This one wasn't on the morning list. It was on my personal side list going into the day. But the same rules apply here as they just applied on the ONMD, some small cap no name stock versus, well, this isn't NVIDIA of all things, but I think a lot more people are catching on to some of the AI trades, some of the nuclear plays. So that's where you see Oklo, you'll see the Applied Digital stock here, but same rules apply. I mean, even on the swing side, look at this. Look how clean of a resistance this is, right around 2830-ish. One wick here, two wick, three wick. And I think that one was basically at 28 bucks, 28.08, the high there on that one. So basically around $28, 28.30-ish. Look what happened last week, the end of last week, right? It peaked as high as 28.25. So that area is pretty strong. That 28 area to 28.30-ish. Well, blasted over it here, right? And ran. Well, resistance initially became support. It came into the area and it bounced. But if it's not making higher highs, if it's not making a consistent trend back to those highs, at least originally, well, reversal time's at 10:30, isn't it? So this popped at the open. It did trend back up. And here we are now at 10:30. So granted, its peak was here, but it's a lower high coming back down, right? Same rules apply. So I just want to point that out where I have no problem looking for that initial test of support because it blasted over that resistance pretty convincingly at first. So initially, you get the flip. Now, if it keeps nipping and testing that price as a working support, the buyers are losing the battle. The sellers are starting to win the battle back over again, right? Something like iron here. Guys, hey, you probably had your trading account blown up if you tried shorting the stock over the last 2 weeks. So that's where I bring to your attention. You got to make sure you see lower highs and then the end result, a lower low. If this makes a lower low, then there's more room to see a drop off. If this is making lower highs, maybe it's hanging on by a thread, but there's still a chance that this can come back up. It's like trying to get back together with your high school sweetheart. So you're saying there's a chance, huh? No, but seriously, if this is making lower highs, I'm sorry, if this is making higher lows, pardon me, if this is making higher lows, I have no business trying to, be contrarian trader. Something like Plug this morning popped up early in the morning, so it was up percentage wise leading into the opening bell. And granted, it bounced at 745, but it's making lower highs here. The part that made this a better short, well, was seeing it break a local support line, was seeing it break a lower low a bit here. And once it does that, then you have a trade. Then you have a good trade to work with on the downside. But until it does that, you're playing contrarian trader, and you're not going to be able to make as much money until the break of support happens compared to otherwise. So that's where we're going back to an APLD trade. Is this a screaming short? If it holds below this here, it's not screaming, but it could drop. When it pulls back the first test, it's definitely not a short because it blasted above it at first and ran well. So at first, initially, this is still very bullish here. Now, if it makes lower highs and comes back, that is your potential short. So again, here, is this a short trade? Well, it's hard to borrow, so that's the first thing. If this was even shortable by my broker, I'd still say no, absolutely not. This is up a lot percentage wise, mind you, but it's still making higher lows. So that's the kicker. All right, Kevin, my neighbor here. Good afternoon to you. Perhaps you're going to join us, Kevin, over in Orlando, maybe in a week or two's time. Next week, actually, the 16th through the 18th. We have our big money show event in Orlando. So very much looking forward to that. In fact, if you don't mind, students, give me a second here because I'd like to show all of us in social media this. I'm taking my screen off for a split moment here, so you can't see my screen if you're on our trading room. But if you're on social media here, keep in mind this is the big event that we're going to next week, October 16th to the 18th. So not only is Fausto there, and I'll be there with him, but you got some huge presenters alongside him. Peter Schiff, huge gold expert, hates Bitcoin. He hates Bitcoin, so that'll be fun to talk to him about that. Charles Payne, you should know him, of course. Jeffrey Hirsch, he's come on our platform a number of times, the Trader's Almanac, and a bunch of others as well. But that'll be coming up just next week there, Kevin. Looking forward to having you there with us potentially. But let me get back to the trading room here. Let me pop that screen back up for all of us otherwise. There we go. All right, folks, all of us inside the trading room, let me know if you see the screen again. You should have the screen showing again, right? Good. Cool. Very nice. All right, let's get through some email questions here, folks, if we can. I did get to that one med trade from $2. Like, hey, why was that such a tough level from $2? Well, it wasn't as much as it was the iceberg on the bid there, right? All right, give me a sec here, folks. Got to just go through my inbox and had a question come in actually last night, in fact, on a trade from last week. So one of our students had sent this over on, it was on the stock here, OVID. They sent me a picture of the graph here too. If I feel the need to show the picture, I will. I'll just try and copy it. Otherwise on the screen. So my student Nabil wrote me Sunday night, and he'd asked, Josh, would you please explain to me on this stock here on the daily chart? Here we go. It's the daily chart. What made it gap down? And upon looking to the green candle on which the price was at $3.30. I think this one right here. The date is June 14th. Yep, 2024. There we go. But the red candle at the gap down. This one, where are the two other daily candles from June 14th and the 6th? Oh, okay, so real quick, Nabil. Okay, so to answer this briefly, June 14th, and then the next candle on the daily chart, where each candle represents one trading day, is the 17th. So if we play investigator here and go back, I hope that you could see my calendar popping up on the lower right here. June 14th, 2024, eh? That's a Friday, my friend. So the next trading day is the 17th, and that's a Monday. So Saturday, Sunday, just the weekend. And that's it. Now, how about this? Funny enough, how about this? Because you didn't ask on this, and I know this is going to be the case. There is a holiday in June, right? Juneteenth. And I think it was on whatever day it was, the 19th or 20th it was. Market was closed. So let's actually take a look here, Nabil. Here's the 17th. That's the Monday, right? So we go from Friday to Monday. That makes sense. Yeah, check this out. You go the 18th. That's Tuesday, right? Just the next day. The next candle after that, though, is June 20th. So why is there no 19th candle? That's Juneteenth, federal holiday here. So markets are closed. And that is one way that you could tell. You could just see the difference from candle to candle. Now, Nabil was asking more about the specific dates. Now, as far as the actual gap itself, Nabil, I don't know if you had a question on the exact gap, but I'd love to go over this just briefly. So there is some small cap stock here, OVID. Probably some bad pharma news came out. They probably didn't meet some primary or secondary endpoint on their drug, whatever it is. I'm not going to take a look at the news. That's irrelevant at this point. This ended up trying to move up, and it tried to fill the gap. It tried, got a small way there, but it's not strong enough to make a move all the way back up to 327, where it had gapped down from originally at the closing price on this candle. Came all the way back down, right? Look at that. So, these stocks you can't trust as far as you could throw because they're down for a reason. Maybe they're massively in debt. Maybe they need to do a reverse stock split to stay over NASDAQ or NYSE listing requirements. Now, what happened was, this is easy to say in hindsight, just reviewing this. This took like almost a year for this to even happen. But going into late August, into September, it broke back over this candle's open and high price. It flipped that real nice into support. I don't recommend this as a swing trade because this is still some no-name company, right? I don't know the first thing about this company. Maybe if you do, and if you feel really confident, then you could try it as a swing trade. This could be a great day trading stock, though. Don't get me wrong. Seemingly back from the other week, let alone the other day from last week on October 2nd. Big pop. It's trying to fill the gap more. These gaps do create good day trading opportunities, but I'll tell you, they create more of a swing opportunity, at least if it's a more reputable company, a more name brand company. Shit, I said this even last week here, where SMCI, I don't necessarily trust this company 100% of the way through. I remember their accounting firm left them last year. They ditched them, or maybe that was 2 years ago even. Time flies. But they're a much more well-known, larger cap company. So if there is a big gap here on the daily chart and this was trending up for a little while to begin, I'll feel a bit better about trying to swing this and fill the gap, at least going up. So that's what we've had our focus on here, at least a tale of two different stocks, right? But that was an interesting, example there, Nabil, on the OVID. Now, just to go through this here, this is kind of an anomaly, right? Because this reminds me of Tilray. This reminds me of Tilray from early this year. It gapped down from January 8th, right? This candle on January 8th, this one, After that, it gapped down and moved much lower, correct? But this candle here is January 10th. So you go from the 8th to the 10th. If that was a weekend, there would be a 2-day gap, not a 1-day gap. And there's no federal holiday on January 9th. So that's just where I'll point out that on this one stock, this actually got halted for news pending. It was on January 9th. So just smack dab in the middle of the week. That wasn't a weekend, and that wasn't a federal holiday. That wasn't no Juneteenth. That wasn't no, New Year's Day. So that's just where that is specifically one where the stock got halted off of news likely and then reopened following after. All right, let's keep it moving here, folks. Again, any and all questions, just make sure that you email me, especially for next week and going forward, because we're going to finish up in just a little bit here. Let's see. I think I don't really have any other emails coming in right now. Let me just check spam or junk. I had a private chat that got sent in early this morning, but just otherwise. And I always suggest just to email me if anything, just so you can get the question answered. So I think this was just asked earlier about APLD. I think I kind of went over this just a moment ago, just indirectly. But point being is that 10:30 in the morning reversal time. I think a student was asking like, well, why did it drop off right here instead of going up to 29 first? Because 29 is likely your big resistance, your big iceberg, and it just seems weird that it just topped off 20 cents below that and then came back down naturally, right? Here's your iceberg. It's not like there was some big resistance or big CVP spike in between that. When you look at the long-term graph here, this is a super strong stock. The levels off $20. I'm sorry, the levels off $28.32 or so. This area, this one peak on the weekly candle right there is like 30. So that's just what I'll point out. The stock doesn't need to touch the iceberg, or it doesn't need to be within mere pennies below it in order for a lower high to be built. 10:30 in the morning is reversal time, right? So that's just something I'm simply expecting to begin with. Now, granted, there could be plenty of stocks that just keep moving up throughout the day. So if there was enough bullish sentiment to keep this going, we'd see it. But what's the market up to? It's up a little bit right now, but even from earlier at 10:30 in the morning, it's not like this was sky high and rocketing on up. This was shaking around a little bit still. So at least there, this probably lost some momentum during that time, came back down a bit. One thing I want to bring out or bring up, I should say, is that on this trade, this is the first time that it is testing this area of resistance since 2021. Granted, last week it hit that area, but you still need to see this play out a little bit. I feel not everything is going to run up perfectly like the OKLO week over week, the massive candles. So at least from last week's candle, it kind of got right up towards there. Right now, I'm not expecting perfection on Monday, the first day of this given week. Maybe this ends up moving off of 28 this week, but maybe it's Wednesday, Thursday. Maybe it's Friday. Maybe it's next week, because quite frankly, this thing has a nice gap on the weekly chart here for this to try and pull into and fill a bit. So this might even take a couple weeks time for this to play out and materialize. But just let it be known, I love this level. I love this area. When we can get confirmation over this area, we're going way higher. So I will look at this as a viable swing trade, the APLD trade. All right. All right, folks. Let's see what other stocks do we have here, at least for the time being. I think that was pretty much it as far as the APLD stock goes. We had a good trade earlier. It was on the Pally. I think that's one of the metals companies, right? Palisade Bio. So this company ended up making a nice little pop. It was even from last week. Stock broke over $1 to begin with. So these cheap stocks below $1, we don't really give the light of day to, because normally they don't make as good of a move consistency wise. But at least on this one day, once it broke over $1, it pulled back to $1, under and over, and then took off. Just crazy move after that point. And I think that this is in the news as, if not a metals company, then I think it's one of those companies that potentially the White House is thinking about placing a stake in an investment in. That was some news that came out even as early as this morning. So that's just where, hey, even today, another gap up and run. How do we trade this? What do we look for in a move on Pally here, right? And I'm not speaking right now, I'm speaking from earlier because this stock was on our morning watch list, right? So when you receive the watch list at 9:15 in the morning, 9:20 in the morning, all right, well, how do you prepare for a trade like this? Where do you know what levels there are in terms of entries and exits? Give me a moment here. I'll pretty this up here for us in just a bit. There we go. All right, so let me ask everyone this quick question. What price has the biggest spike of volume on the far right side? On the far right side, Suresh, Tim, Nabil, Grant, all of us answer. What price has the biggest spike on the far right side? What do we got, folks? All the same two, right? Mystic App. It's the volume spike on the far right side. It's a lot more than what's at 195, right? Now, though, that is where I'll say we ended up seeing a pretty good order out here, and it was at this 195. It's about 203,000 shares. Now, what happened to that order is the question. Well, that order didn't get hit. It did not. Didn't get broken through, didn't get, hit, filled, whatever you want to say. It didn't. It got pulled. It got 100% deleted from the order book. Alt Control Delete. That thing got taken off the book. So that, as of right now, is just a bit of a distraction now at this point to me. Listen, if that order's out there for a cup of coffee and then it gets pulled from the book and it doesn't get filled or hit, I'm not going to give it as much respect as what we have here at 2. There's a lot of volume that got filled at $2. Granted, if we want this stock to run, well, the more times that it keeps poking and poking and poking and poking $2 going up, we're going to see more of these green, volume dots. We're going to see this, volume spike get even larger, but with even more green coming in. So at least once the market opened up, it took a while. This actually went down clean to the next support. I didn't make my famed under and over move, right? I don't think it broke under and over perfect. I get asked this all the time from students in the coaching I do. Would you have taken this trade? Probably not, to be honest with you. Probably not. Listen, if I'm up on my morning, if I'm playing with quote unquote house money, or if I already made a couple of good trades to begin my day, and I'm already up like three, four, $500, and I'm not going to blow all of that on this trade. Well, if I'm already up some good money, and then I jump in here, and then I set my stop right below this, yes, I'm minimizing damage, and I could easily take that trade. Now, either way, though, I feel better about this breaking under and over this. So it doesn't make my exact move that I would feel a lot stronger about the entry on. Now, if it pops without you here, if this moves up without you, and you're like, damn, I was watching it, I missed it. I know this kind of stinks to say that, like, well, you should probably wait for $2 next, right? If you miss it from 170 and it's popping up to 183, 185, 187. I'm sure you don't like being told, well, yeah, don't jump in there. Wait for this to go up even more. Well, when you're in between two big levels, you're kind of stuck in limbo. Got off a call with one of our new gold students, Paul, and he's got his head on his shoulders straight. I'm looking forward to seeing how he develops as a trader here with us. Looking forward to that. Now, I discussed it with him, though, the exact way I'm telling you all here right now. Who here has ever seen the movie Inception with Leonardo DiCaprio? Remember that movie? It was from like 15 years ago at this point. Time flies. It is crazy. But it's a Leonardo DiCaprio movie like 15 years ago or so. A pretty good movie at the time. Basically Inception, there is this state of mind called limbo. And point being is that limbo is impossible to get out of. You don't want to be in limbo. That's for sure, right? I'm sure there's more to it than that, but that was basically the point there. Now that's where I say if you're in between one major level and another major level, you're kind of in limbo. And I'm not going to be as incentivized to just jump into a trade randomly, recklessly in between, smack dab in the middle. I want to make sure that my entry is as close to a big level as possible. It's going to do two things for me if I do that. A, it maximizes my profit potential. Meaning, what if this doesn't break over two coming up here? What if this is a stinker off two, then comes down? Well, if I jump in at 192, 195, and that's it, I'd rather take a trade directly over a level, whether it be from a support or whether it be eventually from a resistance. But by not doing that, again, I'm limiting my profit potential if I just take a trade in limbo. And then otherwise, again, if this pulls back, then I'm exposing myself exponentially more to taking some stupid loss than I don't really feel the need to be taking. I mean, I'd say the same thing even here because I'm a stickler to my entry rule set. So, like, what if I jump in here and this doesn't go and it just kind of breaks down 3 minutes later? Normally I wait for the under and over. So, there's always risk with trading, but what I look for in an entry, I'm immediately looking for to minimize my risk. So, hey, if trading was always done in hindsight, folks, if any Joe Schmo, Billy Bob can get on a microphone and say, well, guys, you should have bought right here, everyone, and you're a loser if you don't. Come on. That's not how trading works. That's not how real people do this, just so you know. So this bounce from 170, it would have been nice to get in from here. Don't get me wrong. That's not the only price that you could have entered from. And the more this ends up nipping and testing, stabbing over two, it eventually broke over two here. It took a little elbow grease, but finally it made a cleaner break over two. It held over two. It moved up 30 cents, 25 cents. Is it the trade to write mom and dad home about? Is it the big 1000% mover? No. Is it a 15% gainer? Yeah. 15% in what, an hour's time, 30 minutes time? That's pretty damn good, right? Let's not be so spoiled, thinking like, oh, stock needs to pop 100% or it's not worth the time. This was an incredible move off of $2. Big level. The more it keeps testing this in a smaller period, I feel more bullish. So that's where I'll tell you, this actually played out as expected. This played out exactly how I'd expect it to. The first time it tests resistance, I'd expect a pop and drop. First test, best test. Now, maybe here, this could be like a false breaker. If you jumped in here, you're probably riding it out a little bit. It's pretty similar to the ONMD, the higher lows. This built higher lows, worked out. But you know what? It held back under two real nice after. And on the next test of it after, that's all it took. Just one more press here. It broke over, flipped it into the support, moved up 15%. That's a nice move still. So I just want to point out that, do I mind if I miss out on a great entry? Yeah, of course. But you just got to bite your tongue. You just got to bite your tongue and say, all right, that stinks. What's the next level? What's the next big focal point for me? Because you don't know if it's going to make this next leg up. When it's popping up at $1.83, $1.89, I mean, the hope is for it to make this move, but that's not the guarantee, right? So that's just where I want to point out one more time. Hey, if there was a 500,000 share iceberg that popped up here out of nowhere, well, subject to change. If there was something astonishing popping up on the order book that would make me say, okay, let's buy it right now, I would. But if there's nothing, astonishing popping up out of thin air, then I will wait for the next level. Pretty clean move from $2. If we waited for this to re-break over two, get in at 201 here, seems pretty effortless, right? So taking the trade from a higher price level isn't always like chasing. It's not always bad. It's actually pretty good at times. All right. So, folks, let me know if you have any other questions before we finish up, at least here. We're going to go an extra like 4 or 5 minutes, but we're going to wrap up in just a moment, though. I mean, we had this freak show stock earlier today, SPRB, Spruce Bioscience. I guess it's halted right now, going up. That's cool, I guess. This ended up having a crazy pop in pre-market. Hey, if you were riding this out from pre-market, that's where you're making your money. But once it explodes like this and pops up, it's up a lot percentage-wise at that point, so probably wait to see consolidation. But B, otherwise, this had a gap on the daily chart that this basically had to fill. And it did that up towards, oh, actually two gaps. That's too funny. That's funny. I was actually looking at this one first. So, when the market opened up, this ended up opening up way above that price, but it all but filled a gap in the pre-market there. And then the next one up was all the way up towards $40 and like 20 cents, 40.19 here. That is where I would have expected this show to have ended immediately. So when this got halted on the way down here at like 9:49 in the morning and reopened up much lower, I didn't give this the light of day myself today, but that would have been game over at that point. It filled the second gap, let alone the first one. But at this point, it's up so much percentage wise, filled that gap. The fact that it's coming back up here again, listen, if anyone wants to like play the slot machine on this, trading one share, be my guest. If you're going to have minimal exposure, that's fine. If you want to have a little fun, just realize you're not going to make as much money doing that. And that's a good thing because if you trade higher, larger size on something like this, you're increasing your risk exponentially and you don't need to be doing that. This is not the only stock out there that's being traded today, let alone right now as we're talking. As we're talking right now, guess what else is moving? Quantum. So a lot of these trades are still moving on up. My soon stock I have on my scanner here right now too. This one's pushing back on up, and we're likely going to see this fill a gap of its own soon enough here as well. What the hell? Give me a second here, folks. Pardon me. I thought this had a. Oh no, different stock. That's right. Okay, pardon me. No, this one didn't have the gap as much that we were focused on. I think this one's the one with the fib extension set. But either way, point being, there's a lot of trades out there, folks, for us to focus on, and that's just where you don't need to trade the sideshow act to try and make money. So I'll root anyone on here on this type of trade, but if you get destroyed on this stock, it's kind of expected because this thing's got such a bad spread. So that's just where, again, hey, if you want to try this, do it on just like, 10 shares, one share and have fun, a little responsible fun, never hurt nobody. But if you're trying to actually make income using a high probability strategy, it's going to be a lot easier to use said strategy on a stock like this that has at least a good spread. A stock like this that at least has a good order book, filled with icebergs. Same with QBTS. Same with the Soon stock, right? I mean, same with SMCI if this could eventually wake up too. But folks, we're going to wrap up at least for right now. All of us here inside our live trading room. Oh, Shaffin on one last one here. Well, how the mighty have fallen. This CRML, rest in peace. Basically how I think of it. So let me give you more context, though, than just that. This stock is a metals company, so maybe in the similar type of situation as Pali or TMC, these metals companies and rare earth companies, USAR, another one. A lot of these are getting a lot of steam lately because I think there's some rumor going around that the White House and Trump might look to take a position on a couple of them or a stake like they did with Intel. So don't get me wrong, this had a great pop from Friday night, the 3rd, right? Stock went from 805 up to 16, a 100% move, right? And that's just from Friday to Monday. I mean, how about from the last month or so prior to that? From end of July. This was a $3 stock. Now it's 16, right? Um, the reason I say it that way to begin is because any stock that goes up that much, it's not going to be surprising to see it exhaust out. It's not going to be surprising to see, at least at that point, just maybe profit taking or maybe just consolidation. But otherwise, what happened here? This obviously fell off a cliff, and this had to have been news related. So let me just pull this up for Chuck and all of us here, just joining us live right now. What do we got? What was this? The CRML. I was going to guess an offering. I didn't check the news before this, so let's see. Well, this would this would be the nail in the coffin. So remember what I said. The rumor going around was that the Trump administration was discussing taking a stake on critical metals and certain other companies. Blah blah blah. That was the rumor, folks. The rumor with no confirmation, right? Oh, looks like the White House tells Bloomberg they have no plans for a stake. So they basically put the nail in the coffin on that thing right there. Right at 12:05, that news came out. Or maybe before that, the news came out and it got halted. Then, maybe Benzinga kind of delayed with the news post. But point being, no bueno, not good. I remember going back to my APLD stock here. I remember when NVIDIA took a huge position in them last year, it was in 2024. And whatever day it was here, they fell off a cliff. Or maybe it was even in 23. I lose track of my days, weeks, months. But it was after this big move here. And when that news broke, that NVIDIA was, taking away their, stake from APLD, and they did the same thing on Soon and others. Those stocks tanked like 35% instant. So makes sense. Not a surprise at all, knowing that now. Kind of interesting that CRML was the only company mentioned there. I thought it was just a general rumor that they were planning on just a couple of the companies. So that's where you were seeing some good movement in like TMC. And I think, if I'm not mistaken, Pally. Okay. Pally, not a metals company. Let's just get that out the way. Biopharma company. So that's different. But otherwise, though, yeah, I mean, with this dropping, TMC definitely took a huge hit with it, but they weren't listed in that news. And the USAR took a huge hit also, but that's kind of building support right now. These stocks might look to make a bit of a slingshot, at least going into the next day, maybe even by this afternoon. At least the USAR and the TMC trade have a better shot of recovering. The CRML is the more volatile of the two, or of the three, but this is the one that seemingly has the headline written all about. So I feel like it would be tougher to have this make a full-fledged recovery compared to the others. All right, folks. Hey, we are going to wrap up at least for right now. Got a minute left. I got to jump on to more coaching. How about that? If you are a platinum or diamond student, certainly I've been already talking to a number of us from last week into today. Get you scheduled just on my calendar. I have a couple of us that need to move around. No sweat, all good. And then otherwise, as a new gold student joining us, I mean, you certainly should know. Your education advisor, tells you right away when you sign up with us, and I go over it with you. And lesson number one, but as a new gold student, even further more important for you to get your initial coaching scheduled. It'd be the best line of communication between you and myself for us to go through just the trades that you're making, what you're observing in the room yourself. Gives us a bit more intimate time for us to go over questions that you want to go over and stocks that you want to go over. So definitely we'll find some time to schedule those coaching sessions soon. But folks, hey, if you have any other questions, and if you don't have coaching, then shoot me over a quick email. Josh@ctutrading.com is the handle. And especially if you're on social media, Facebook Live, LinkedIn, Twitter, YouTube, etc., feel more than free to send over any questions yourself to me. I have no problem answering anything for you as well. But otherwise, for all of our members on social, if you wanted to join us inside our live trading room, just go right down to the link scrolling on the bottom below in blue, ctu.co/trial. That will get you exclusive access for a week-long membership to our live trading room. Join students right now like Bill, Shaffin, Grant, got Suresh, Leda, Alex, Uday, Manny. Got a lot of us here just joining us right now. Margaret, you as well. I always appreciate you, Margaret, each and every day here with us. And folks, we're going to come back at least at 2:30 Eastern this afternoon, just for the afternoon meeting. Again, hey, if you were interested in learning more about our money show event that we have coming up just next week in Orlando, if you're local, if you're in Orlando, uh, check them out. Go right to the Money Show, at least here, moneyshow.com. You'll see the Orlando event coming up next week. Fausto is going to be there. I'll be there with him, actually. So for all of us inside the live trading room, you'll have Rich basically holding the fort down over the next over those days at least. Wait a second. Whoa, Rich, I wasn't done yet, my friend. What are you doing? What are you doing, Rich? What are you doing? Hold up. So, folks, as I round third and finish up this workshop, keep in mind if you wanted to go to the Money Show event, just go right to moneyshow.com right there. But Fausto is going to be joined by Charles Payne, Jeffrey Hirsch, Peter Schiff, among others. And, it's more for Florida, Orlando area. So, Kevin, I know you're on YouTube right now from Lakeland. You're practically going to be there. So, hope to see you. And alongside perhaps some of our students that are around the Florida, Orlando, Tampa area. But folks, we'll be back live this afternoon just at 2:30 p.m. Eastern for the afternoon meeting. I'll talk to everybody then.